So today we have a very special video about how to invest as an American abroad. If we can't figure it out, no one can.
True statement.
True statement. Hi guys, it's Vanessa from Wander Onwards, and today I have a very special guest, my internet best friend, Natalie.
Hi everyone, Natalie from My Expat Taxes.
So today we have a very special video about how to invest as an American abroad, and we're specifically talking about brokerages, what you can and can't buy. I'll be teaching you a little bit of information about what the terms and characteristics are of different funds and vehicles for wealth management. And then we're gonna really demystify what reporting looks like, even for crypto, because I think no one really talks about this, am I right?
No one talks about it. Basically, long story short, spoiler alert, it's not that complicated, but there are things you do have to know as an American abroad investing. So keep watching this video.
Los gates! I like bilingual videos. Like, I'm spending so much time learning German, I'm gonna use German in my videos.
I won't stop you.
I appreciate it. All right, so now we're going to get into what investing means as an expat abroad and what are your options when it comes to brokerages, tax liability, and what you can actually buy. So let's first start with brokerages because these are a real pain in the butt. Abroad, Americans are not actually allowed to open brokerage accounts with most companies. And why is that, Natalie?
Honestly, I think it's really just because of the regulations you have with the US and your local country, making sure that your money is accounted for. And again, the US, they like that your money stays in the US. That's the main thing. That's really what it comes down to.
Well, it's rude and I don't like it. So we have a few options for you. If you are interested in opening a brokerage account that's quite high touch, where you decide what you're buying in that particular account, we can recommend Charles Schwab International, and it's specifically the international account. So you will need to bring $25,000 to the table to open this account. So it's a bit more for more mature investors, but at least it gives you the opportunity to invest in US funds while you're abroad and opens that flexibility up for you. What was your second recommendation?
Yes, so again, at the end, it depends on your unique situation. This is really not, it's general recommendations. However, I do want to say that a lot of financial institutions are starting to realize the emerging affluent, which is AKA people that don't have $25,000 to bring to the table, maybe $1,000, maybe less. And you know, Dunhill Financials, they do have actually a whole kind of portfolio and service catered to the emerging affluent. I'm sure that other financial institutions also are starting to have this emerging affluent class. So that's something to kind of search for, AKA that is your Google keyword to look for emerging affluent. And that will be for those that are trying to invest but don't have 25K to bring to the table.
And we're gonna link all of these recommended resources down below in the comments and in the description, so you don't have to go on a wild goose chase. Of course, if you are liking this video, drop a subscribe, hit that bell to receive a notification when videos are posted, because I release videos every single week. Now, let's get into the nitty-gritty about what you can buy when you're investing as an American abroad. So when you're thinking about things that you can purchase, there's the usual suspects, which include ETFs, exchange traded funds, index funds, stocks, which are associated with individual companies, bonds that are associated with companies and governments, and then of course you have my least favorite, crypto. I know I am buying a little bit of crypto every so often to hedge my bets, but I'm not sold just yet. Do you buy any of these things, Natalie?
Yes, so again, it depends on a lot of stuff. I will kind of warn ahead of time that right now we're talking about US ETFs, index funds, etc., etc. So those are generally great for the US because they're regulated by the US. However, keep in mind that if you invest in these, your local country might not be so happy. Like for example, Austria is not very happy when you invest in ETFs or US mutual funds, while the US is not happy if you invest in Austrian foreign mutual funds, etc. So they basically say this is unregulated. We're going to tax you on unrealized gains. I start there.
Okay.
I probably just put a big rain cloud on everything. Now, with that being said, what I do buy is stocks in individual companies. So the thing is when you think about this whole problem with PFIFs, the PFIFs.
Yes.
You think about PFIFs or in Austria, Schwarze Fonds, or et cetera, it's about investing in pooled funds that are not necessarily regulated by the country that is taxing you. However, if you're buying into individual stocks, this is generally fine because it's just buying a stock, you know, that's very much regulated, and you buy it, when you sell it, you report it as a capital gain. So I do a lot of individual stock purchases.
Confused about what to do with your money abroad? Well, I can help with that. My financial fluency course will give you the perfect overview of how taxes work, budgeting methods, investing options, and so much more. Check the description for details.
So are these individual stocks from US companies or foreign companies?
It can be either or. I mean, the foreign company is then the question of if that foreign company actually has active income versus passive income. I don't get too much into that. If you're investing in a foreign company that obviously is selling a service, a car, etc., it should be fine to invest in these foreign companies itself. It's investing in pooled funds that gets a little tricky, which is not great because the pooled fund is kind of where you can get a lot of, you know, diversity in terms of your portfolio and hedging your risk, etc. I know, however, tax-wise, it can be tough.
Is it tough in the United States or in the country that you're in?
Depends on what you're investing in. If you're investing in US pooled funds, it's obviously not tough in the US because it's regulated by the US. However, it may be tough on your German tax return, on your Austrian tax return. If you're investing in Austrian or German pooled funds, it's obviously not tough in your local tax return. The US hates it.
No.
The US will hate it. You'll probably at one point or another have to go through filing form 8621, and it is not fun. That is the most common time I see expats having to pay tax, because unless you make a certain election, which you can do, you can invest in foreign mutual funds. You just need to plan ahead. Everything is about planning. Again, don't throw your money into buckets, and you know, be a little bit oblivious about where it goes. But if you plan ahead, you can invest into foreign mutual funds, but you need to know that you should probably either look for a qualifying electing fund, which is very popular at places like Canada, iShares, BlackRock, etc. So qualifying electing funds are a little bit easier, but you have to make this election on form 8621. Or you have to make a mark-to-market election. I'm starting to make Vanessa really sleepy. My main point here is, if you do want to invest in US mutual funds, check your local country's regulations. If you want to invest in foreign mutual funds, make sure you plan ahead, that you make the right elections, and just expect that your tax return prep is going to be a little bit more expensive.
So if you've already made this mistake, you're not alone. The first year we started working together, I was like, Natalie, I'm such a delinquent. Like, I have all these problems. No accountant has ever been able to help me within like a reasonable amount of money. And I spent $2,000 on just accounting services to fix the problem that I had created.
That could have gone into your investment account.
I know, girl, but where were you in 2018 when I was floundering? So if you have made these mistakes, it's fine. We have solutions for it now here at My Expat Taxes. I'm saying here now as if I belong here.
You do belong.
I'm
honorary member.
Yes. Natalie, how do I report my investments to America on My Expat Taxes and just in general?
It depends on what kind of investments you have. So let's say you have normal US investments, so capital gains, dividends, interest, etc. You have some type of 1099 form, 1099 div, id, b, etc. You report it normally. We have a US tax form section. You would report it as interest, dividends, and or capital gains, and you could benefit from, you know, qualified dividends or long-term capital gains tax rates. So that means that, you know, anywhere between 0 to 20% tax instead of ordinary income tax rates. So US investments, very easy. Foreign investments, a bit tougher. Again, if your foreign investments are just in stocks in foreign companies, there's nothing to report until you sell those stocks, and you would just sell, you know, you just report it as a normal capital gain.
Taxable event, y'all.
Taxable event. You would report it as a normal capital gain, and you can again have, you know, the lower tax rates for long-term capital gains. Now, if you have foreign mutual funds, we do have a section asking about foreign investments, aka how much do you own and what's the fair market value on the end of the year? Did you get any distributions from them? Did you just buy them, etc., etc.? And we'll determine if you need Form 8621, the P5 form, in your tax return, and kind of what's the best way to go. But that is more involved, so that is not really a do-it-yourself procedure. That is you enter in the information, we get a flag as a tax professional, and we ask you more questions to make sure everything's accurate. Because My Expat Taxes is not just about doing it yourself, it's about actually getting good tax advice when you need it. So that is reporting. Now, crypto is another one. Crypto.
No.
We have to talk about it.
I know, we're talking about it. Okay, this is not vouching for crypto, but
crypto, if you have crypto transactions, the number one problem I see is the lack of reporting. So what you want to do is you want to make sure you have a good reporting tool. There's so many out there, right, that you can just go and link it up to your wallet. You're probably gonna make, I don't know the terms.
I do, so carry on, you're doing great.
Yes, link it up to your wallet, right?
Yes.
And essentially what it will do is generate a Schedule D and an 8949 for you. And in My Expat Taxes, you actually have an option where you can just say, I just want to attach this substitute form to my tax return, because ain't nobody got time to enter 100 plus transactions on your tax return for you. That is what automation is for. So you would just go to My Expat Taxes, you would attach it. This is somewhere where you have to have a tax professional attach it for you to make sure everything's reported correctly. And then that would be how you report that. But again, pretty much normal capital gains. If you have interest or dividends, it goes into interest or dividends. Main story, you gotta report it. If you have foreign mutual and or pooled funds, you might even have to report a little bit more.
And just to get into, how do you figure out what these distributions are, what your taxable events are? If you go into your brokerage, they'll actually have a tax form section, and you can download a summary of what had happened in that tax year. And that truly saved me last year, because on the form on My Expat Taxes, it was like this number slash thing that we need directly corresponded to what my brokerage had given me. So it took me like less than 5 minutes to do, which was amazing. Because in the past, it has cost me $2,000 to get this type of service done. So +1, hashtag it, retweet. I appreciate it.
Yeah, and of course that's for the US brokerages. For foreign, it's the same. You just have to get some type of statement that says, this is what you had in dividends, interest, this is what you sold. Now the tricky part is if you reinvest your money.
Oh no, I've been doing this. Tell me the bad news.
No. If it's on a US brokerage, it's fine because it's reported on a 1099. If you have a 1099 form, that is the source of truth. It reports everything perfectly to, a T for US tax returns. Not necessarily for German, but for US tax returns. Now, if you have foreign investments, you do have to account for, if you kind of reinvest your dividends, that does still count as a distribution, because again, the US is about taxing you the second you have access to that money, even if you put it back into a fund. Remember the pension contributions?
They will in the other video. This is not that video, but I will link it in the bio. Not the bio. I will link it in the descriptions.
Sounds good. So really, distributions, pretty easy on terms of US brokerages. If you have foreign, you just have to get good reporting. Please do not try to do it yourself on an Excel spreadsheet. You should have some official documentation from your financial institution. If you are investing, the number one thing is to know what you're investing in and what income you get from it, because we cannot help you there.
No. And to give some ideas into what you might be getting from a stock or a bond or an index fund, there's different types of income that you could be receiving. Of course, if you are liking this video, drop a subscribe, hit that bell to receive a notification when videos are posted, because I release videos every single week. You mentioned reinvesting the dividends that you get. I'm a big reinvestor because I want that compound interest on that compound interest. So that's one option of what might come to you. You also could increase the value of your stocks, which I believe you said is not taxed until there's a taxable event, right?
Taxable event is when you dispose of stocks. Yes.
Perfect. So if you bought Amazon in 2007, there we go, and it's now worth $3,000. If I didn't sell, do I have to pay tax on that?
Not until you dispose of it.
There we go.
Just keep in mind that, sometimes when you do invest in these kind of robo-advisors, etc., they just sell and then they rebuy.
What?
Again, if you are doing US brokerages, your 1099 forms will tell you exactly what happened. So that's fine. If you're doing something abroad, you do need to have a good record. So again, if you reinvest your dividends, that dividend might be taxable because you actually got income even if you reinvested it. But if you just purchase something, there's no taxable event. It's normally when you dispose of something, you sell it, you get income.
Perfect.
No heart attack.
No heart attack this time. Of course, if you are liking this video, drop a subscribe, hit that bell to receive a notification when videos are posted because I release videos every single week. So now that you've heard about what you can buy and what you should watch out for, I'm sure you're wondering, how do I even open a brokerage account? So it's just like filling out like a job application form. There's some traditional things that you need, like your legal name, social security, you need contact details, email address, cell phone number, etc. They're also going to want you to prove you are who you say you are. So be prepared with a passport or driver's license. I've also seen these newfangled investment banks verify who you are on a phone. So there's like an employee somewhere else that confirms your passport is next to your face, etc., etc. I would give yourself at least like 30 minutes to set up your brokerage, but it's not too complicated to prove you are who you are. They will also ask you if you're being coerced into opening this brokerage account. So just make sure you understand what you're doing and that you are comfortable with this next step in your wealth generation path, because they won't let you open a brokerage if you aren't. So moving swiftly on, let's talk about a few options that you can buy in a brokerage account. Now, you're going to hear from Natalie that there are very specific ideas of what you can buy where, but let's make sure it's clear about what these options are so you can make the best decision for yourself. So first, we have a very traditional mutual fund. And what that means is somewhere, someone that is very important is going to choose a basket of stocks for you to try to balance out the risk associated with investing in Apple versus an oil and gas company. Now, these funds are like highly regulated and specifically like controlled by big business because they are expensive. So people want to get the biggest bang for their buck. And so they have an army of bankers, analysts, etc., that are trying to make this mutual fund profitable. Then you have an index fund and an ETF. And an index fund is basically a mutual fund, but they tend to be lower in cost and a lot more automated in their process. So when you pick a index fund like the S&P 500, you know that at the same time you're buying a basket of stocks, so you're hedging your bets about which one might go up or down, and you're paying a relatively low maintenance fee, aka a expense ratio. I don't know why they make these terms so hard. So if you're
it's like tax.
It is like tax. If you're really risk adverse, these two options might be something to consider. Now we have the exchange traded fund, an ETF. It's the same like thought where you buy a basket of stocks to hedge your bets, but they're actually traded in real time. So if you were buying mutual funds and index funds, you need to wait like 24 hours to 72 hours for them to execute the market trade. ETFs you can actually buy in real time. So people tend to gravitate towards that if they want more control over what's happening with their investments. A lot of information. I'm gonna make another video going into this in detail, but these are the three that most investors stick to. If you wanna razz up your investment portfolio and buy individual stocks like Natalie does, then you would buy company stocks specifically. So that means that you own a piece of Apple, you own a piece of Disney, and some brokerages can actually allow you to buy fractional shares. So if you can't afford to buy $3,000 worth of Amazon today, you can buy a fractional share, which allows you to buy $100, $50, etc. And then you start compounding those shares. That's a great option for people with lower amounts of capital to get started, but as expats abroad, there's only a few places that will allow us to do this, unfortunately. Charles Schwab is one of them though. So If you have $25,000, this is an option for you. Lastly, we have bonds, and this is either a company bond or a government bond, and that's basically an IOU that these people will eventually give you back your money plus a little bit of interest. Unfortunately, that interest is at historic lows, so it's basically like keeping your money in a savings account at this point, whereas the mutual funds, index funds, ETFs vary based off of how the stock market is doing and how that fund is performing. But the S&P 500 average has been like 10% over the last 40 years. I'm gonna fact check myself on that later. But you can see, would you rather earn 0.0% with a government bond or something potentially more profitable? It's really up to you and how comfortable you are with putting your money and capital at risk. Because right now we have the Ukrainian crisis with Russia and my portfolio's in the toilet. But I have a strong head, I'm holding, not selling, so I don't have to realize those losses with a taxable event by selling. Instead, we're gonna let go and let God and wait for these index funds and ETFs to compound over time. And I should be making back what I have lost so far, thanks to math and historical data.
Just don't look at it.
Just don't look at it.
Just don't look at it.
Don't look at it. Yeah.
This is the one instance where you just don't look at it.
Don't look at it. No. Did that make sense? Was that a good explanation?
That was a good explanation, but you forgot your favorite investment, crypto.
No. Okay. All right. So it's no lie that I am not convinced by cryptocurrency just
I'm also
yet.
not that convinced.
Yeah, we may sound like risky babes, but we actually would rather dedicate our money to proven financial vehicles versus whatever is happening out there. Have you seen some of these like shit coins? That's their actual name. I'm not just
I
being
just don't
mean.
look at it.
Yeah. So these coins people value at like 0.0000001% of a dollar, and then they just pray that they go up.
Okay, let go.
I've tried.
So there's crypto. That's another thing you can invest in. I think at the end of the day, the important thing is to find what works for you. I mean, those are investments. I think one thing you're forgetting, and this is just a little empowerment part, is you can also invest in yourself, such as us creating our own companies. I know, but that is something people don't talk about. Investing in yourself is also something. Building a company, owning shares of your own company, that is also an investment. So don't take that one too lightly either. I stopped there.
No, I mean, but it was a great final thought. So as our business values, our businesses have different value propositions. So I'm a freelancer and all of the income that I get is taxed at a normal income rate, whereas Natalie is a business owner, and how does that tax work?
Yeah, so I mean, there's the income that the company makes, right? Obviously, any income I pull out as my compensation is taxed at ordinary individual income tax rates. Any income that the company makes is obviously then taxed at, any corporate tax rates. Now, the big difference there is, while I do get my compensation, I also still own a significant portion of the company. So one day, depending on what the worth of the company is, that is an additional part of one income I may realize in the future, right? So that is kind of how that works there.
Yeah, it just depends on what your definition of investment is, and to always diversify the risk associated with it. So for me, I have 10 different streams of income. One of them is my investment accounts, one of them is my pensions, and then one of them is Wander Onwards, because this is a profitable business, which is wild to think, because for 8 years it's been an expensive hobby. And how many streams of income do you have?
I do not have 10 streams of income, so
No one's perfect.
No. So for me, I always said that I want to invest in myself the most, which is why I started My Expat Taxes. I went to start a company and said that is the most surefire bet, because I can't control the stock market. I can't control what other companies do, but I can control what I do, the energy, the dedication I have every day into building a big company and helping as many people as possible. So I don't have 10. I have My Expat Taxes. I have some investments. I have my pension. That's pretty much it.
Yeah.
Right? So probably, for Vanessa, you're probably like,
what's she doing over there?
yeah, working for you guys to make your tax returns so much easier abroad. That is what I am doing.
Agreed. And at the end of the day, personal finance is personal. So if you want to do a hybrid, if you just want to focus on your pensions, that's up to you. We're just here to give you all the options and for someone specifically to rain on all of your parades and hopes and dreams with what is expected of you as an American abroad. But we're here to support you and encourage you to pursue your dreams, even if they are a little bit complicated on a tax form. It'll be fine.
Nothing's that complex. Nothing is that complex.
True, and she could help me, y'all. I got 3 countries under my belt now that I have tax implications for, and we were able to fix it.
Everyone thinks they're complex. No one is that complex. Some people are. Some people are. Some people really are, but for the majority of expats, I'm sorry to say, it's not that complicated. As long as you kind of understand what's going on and you can tell us that, we can help you figure it out.
Well, I will take that personally, and I'm deeply hurt. But thanks so much for watching this YouTube video, everyone. I've linked all of the resources down below in the description. Once again, you can find me on Wander Onwards. And where can they find you, Natalie?
My Expat Tax is the one and only. So always make sure if you're looking for the best expat tax solution, just type in your browser, super easy, myexpattaxes.com. We are the only My Expat Taxes out there. You know, once you start getting bigger, there's copycats and it's kind of odd, but I'm sure you feel the same way. You've seen it.
Yeah.
You've seen it. So myexpattaxes.com, you can find us on social media on every channel. Instagram, TikTok, LinkedIn, Twitter. I think we even have a Pinterest account out there.
Good.
YouTube. Obviously YouTube.
Yeah.
My Expat Taxes, the one and only.
Great. Thanks so much for being here, guys, and I will see you in the next video. Of course, if you are liking this video, drop a subscribe, hit that bell to receive a notification when videos are posted, because I release videos every single week.
Thanks for watching. If you liked that video, please give it a thumbs up and subscribe to my channel.